Join me in welcoming Mr. Bejul Somaia, Managing Partner of Lightspeed India Partners, on the show. Thank you so much, Bejul, for joining me. It's such a pleasure for me to be able to host you.
Thanks. Thanks for inviting me. It's good to be here.
Glad to hear that, Bejul. And as I was telling you backstage, that this is one of my bucket list episodes, and I'm going to jump right in with the objective that we can understand more about how venture capitalists, with your kind of experience and perspectives, actually thinks, right? So I'll jump to it, and my first question there is basically on decision making, right? Because from the way I look at it, a large part of what a venture capitalist does is, let's say, take decisions for a living. And when we talk about it, just to understand your perspective on how is it that you approach any given problem, any given decision, and what are the variables that you're considering, I think that'd be a great yet abstract way to begin the episode.
Sure. So I think first and foremost, in our business, it's important to have exposure to upside. We're as investors, we're in an asset class where we will take a fair amount of risk. Some things will not work out. That is the reality of innovation and entrepreneurship and anything associated with it. But hopefully, some things work out really well, and then there'll be a set of things in the middle. But if you don't have in a portfolio, if you don't have the set of companies that work out really well, it's unlikely that you can build a very high performing fund or portfolio.
Right.
And so our focus really is, as we think about decisions, it is about, where can you get exposure to that type of very high upside. And so first and foremost, we're thinking about that, the potential for upside, which is different than many other asset classes where one is really focused on, for example, not losing money.
Right.
Obviously, we don't want to lose money, but the focus is less on downside protection. The second thing then is really, thinking about what combination of things can provide exposure to that kind of upside. And at the very early stage that we invest, it often comes down to founders and markets.
Mm-hmm.
Founders are ultimately the very special people that navigate markets,
Right.
and those that do it really well are able to do things that one would never have imagined. And so there are certain characteristics that we look for in founders based on, the experiences we've had and the good fortune we've had in working with some of these special people. And then in terms of markets, we're really looking, one has to look at markets that, the word we use is surface area. These are markets with very large surface areas so that you can, if things go right, you can build a very large company. And so, those are some of the things that go into our decision making.
For sure. And, that paints a fairer picture as to how decisions are made, and we'll dwell upon it further. But now I want to shift to how you've navigated the decisions in your life, right? Because large part of your experiences also show that you always have that affinity to be on the founder end of things, right? Be the player, build things. And then you move to the venture side of things, started the Lightspeed India Fund, and a lot of things related to it, right? So if you can perhaps give us a bit of context to how you navigated decisions in your life, and how do you keep the founder aspect of it alive in the venture role that you currently have and the day job that you currently have, that'd be really interesting to hear.
Well, I wish I could give you an answer that made it seem like it was all well planned and executed. It wasn't. I think I'm generally. I can say this a little bit more looking backwards, but I think what I've done is I've generally made decisions in favor of what I'm drawn to as it relates to my own personal decisions. Perhaps earlier in my career, I would have been much more analytical about, is this the right thing to do in the context of a career? But I think subsequently, there was much more spontaneity, much more serendipity involved. And as I said, really sort of this instinct around, this is something that I'm feeling energized by, played a bigger role than perhaps cold calculation or very rational thought. One of the things that I think does weave through my career and I do believe is really important, is just being around really high quality people. So whenever I've made decisions as it relates to my own, career choices, and what I advise others when they come and ask me is, who are you going to work with? Because that's who you're going to learn from. And if you work with the best, then you learn from the best, and you learn things that you would not learn anywhere else. And regardless of how that experience may end, that learning that you take away is priceless. And so, if there's one thing that I've done and continue to do, it is to focus on the people involved in those decisions, and that obviously flows into the work I do now as well. And as it relates to the founder or the entrepreneur aspect, I think of myself very much as an entrepreneur in the venture business. Like other entrepreneurs, we have to think about our part of the market, our value proposition, our differentiation, how we compete, the culture we build, how we attract great talent, how we retain that talent, what our strategy is relative to our peers. These are all things that we have to think about in addition to our investing and investment decisions. And so in that sense, I sort of, feel very much that I'm an entrepreneur, and I love that.
And that's very evident with the way you're speaking as well. And, I love the first part of the answer as well, where you simplified it in such a great manner. But, stemming from there, this just popped up in my head, and I'd love if you can clarify, right? In the business that you are and in the business that founders eventually get into as well, what really counts as winning, right? Because are we just purely looking at numbers? What is it that you're extremely fascinated about and curious about that gets you going? That identifying the end objective before you get on that journey, like part of it, as you mentioned, that it can be applicable in career choices in terms of the people you end up working, so the end goal being learning. But in the business that you happen to be in and the way founders can perhaps look at it, what do you suggest would define winning, success, victory, whatnot?
Yeah, it's a lovely question, and it's, I think, a question to which there is no one answer and no one size fits all answer. And often what we try and do is we try and understand what winning means to a particular founder. And hopefully that founder is also doing the same with respect to evaluating potential investors. Right. Is where is there an alignment of what it means to win? And I don't think there's any right or wrong here. It's just, it's a very personal choice. Obviously for us, we have to generate certain types of returns. And so the return profile of something is important, but that return profile is really its output. It's the result of some things, right? And so what is it, if you generate high returns, what is that usually the result of? It's usually the result of building a pioneering, durable, market-leading company. Right. And so for me, then I would say that's what, in a sense, the components of I choose those words carefully because they're important to us. This idea of being pioneering, so there's something new and innovative about what the company is doing. Durability is important to us because it suggests that there's something sustainable about what the company is doing. And then market leading, which obviously is an important component of that. So that's the aspiration. And then the last point I would just make, which at least I take for granted, but I don't think it should be, is that this company has meaning for the founders involved. It's not just a way of making money, right? There is a deeper connection to the problem, and then that typically leads to a deeper understanding of the problem. And usually, when you have as a founder a deeper understanding of a problem, you end up serving your customers better than anyone else can, which in turn enables you hopefully to build a market-leading company. So those are some of the things that we look for.
That's spectacular to hear. And that when you spoke about careful articulation and the choice of words, that made me think that when I was just doing my research, I realized that Lightspeed has a great motto or line, if I may, right? Tomorrow built today, right? And from that I figured that again, this is a double-edged sword that I'd love your opinion on in terms of pattern recognition, because as
Yeah.
investors, I'm sure you're looking at multiple hundreds of companies across months, right? And when that happens, you're almost used to catching what's happened when and looking at patterns, looking at trends and understanding it. However, the most defining companies by definition are trend breaking, right? Pattern breaking, pattern creating in nature. So how do you perhaps make sure that these two things are in line and make sure that you have, let's say, the room for surprising your own self as well, and not very stringent in terms of counting things out? So if that, it'll be lovely to hear your opinion on that.
Yeah, I think it's a really important, topic or question, because often people in the venture business talk about the importance of pattern magic. I don't think it's fully understood, at least in my view, for the reason that you mentioned,
Right.
which is that the largest companies will likely be contra to the pattern, right? And so the way I think about patterns is, I think it's really important to be able to see patterns and to recognize them. And it's even fine to be, in a sense, inspired by them and guided by them, but not to be blinded by them.
All right.
Right. So the idea that we can learn from them, and we can recognize those, but you still have that openness, right? And the first principles approach to thinking, that when you see something that doesn't fit a pattern, but it just makes sense, and then you pressure test it. One of the things we often do in diligence, our approach to diligence is not to confirm what we believe. It is actually to try and tear down what we believe. That is sort of the, what we try and do in diligence, right? Is you sort of have a hypothesis and you're trying to tear it down. You're trying to disprove it. And then after you've tried to disprove it, truly intellectually, honestly, from every angle, which is why I think diversity of thought is so important in our business. If it is still standing, then in my mind, it doesn't matter that it's counter to a pattern. What matters is that it's still standing, and so that's how we try and hopefully benefit from the patterns. And I think what the patterns do, they can really help you avoid bad mistakes. Right. And in a sense, and that's important to do. And they can probably help you with sort of the 80-20, right? If you apply those patterns, then, likely you're going to focus on the 20% of stuff that is interesting, and you're going to strip out the stuff that isn't. So that's great. That's powerful. But the issue is, you don't drive outlier returns by being in that 20. You've got to get down to the 0.1% or the 0.2%.
Yeah.
So there's a role for those patterns, which is why I said I think it's important to understand them, but not be so wedded to them and closed, and blinded by them.
Fair enough. So, just the balanced perspective of it and not looking at just one side of patterns. And I love the fact that you mentioned that it's more of a negating mechanism as much as a choosing mechanism. That's a great pointer to hear. And since we're on the subject of, let's say, double-edged swords, another thing that has been a common narrative in the venture business is about taking risks, right? And famously, I don't remember, somebody mentioned it, that, venture by definition is, again, betting on or taking risks, but they don't often usually do, because again, some of the venture funds are looking for the most obvious of companies, right? And we understand that there are multiple stories of how an Airbnb was rejected. I'm sure an Oyo must have been from multiple others as well, right? But given that you also come at a stage which is very early on, right, where there's not much to show tangibly, right? It's a very early bet, the convictions on a multiple sort of thing. So how do you think of risk when you're in the venture business, and how do you perhaps would suggest founders to look at risk as well from your learnings experiences?
Yeah, look, again, I think different venture firms will have different approaches to this.
For sure. Yeah.
As I said it in my opening thoughts, I think what our business is really about is having exposure to upside and to these companies that we talked about that can be winning companies, and so that is the priority. If we think about it in the context of avoiding risk, if let's say we make an investment that, our first investment in Oyo was $600,000. Okay. So what's the worst that could have happened? The worst that could have happened is we would have lost $600,000. But what actually happened? I think it's in the public domain, so I won't go into that. So is the more expensive decision, or is a more expensive mistake potentially risking $600,000, or is the more expensive mistake not being in that company?
Right.
Right. It's clearly the latter.
Yeah.
So then, what it comes down to is, when we talk about risk, what is the risk? Is the risk the money I may lose, or is the risk the winning companies I may not be in?
Yeah.
Right. And then depending on your framing then of risk, it will actually kind of guide how a firm invests.
Fair. Wow, that's spectacular to hear. And like just weighing risk in the right manner, and like not looking at it from a short-term perspective, like as opposed to just, as you said, the money lost versus the opportunity to be gained. That's a great mechanism. Moving further, like I want to delve a bit upon, how Lightspeed thinks about a couple of things, right? And if you can perhaps indulge. So there's this term, right? Fund market fit, right? So in that prospect, like how is it that you perhaps, look at Lightspeed setting the ball in terms of how you've entered the India market, and you're also championing the cause for the Southeast Asia expansion, right? So if you can perhaps tell us a couple of things about how Lightspeed looks at the venture business and how it's becoming competitive by the day, for the right reasons, I'm sure, because there are great founders building great companies. So would be lovely to hear your answer there.
Sure. So Lightspeed has a fundamentally a global view of the venture capital business. We believe that technology-driven disruptions and innovations will happen across the world, and when they happen, there will be significant dislocation in those markets, innovation, and value creation. And we want to participate in that process wherever in the world it is, in the sense of meaningful markets. Not that long ago, there was a perspective that was entirely the domain of the United States, right? And so a lot of venture firms did and still do only invest in the US, and that's okay. But I think as a firm, we not only, I think, are seeing that this is happening across the world and are participating in it, but there's also a lot of learning that now flows across borders, right? Because there are some things that, if you take, for example, the B to small B business, where we made an investment in a company called Udaan in India. That was at a time when many people would have been skeptical about, any companies that target small businesses. But subsequently, for example, we made an investment in a company called Fair in the US, and that company is now doing very well. And there's a whole set of companies that are, this ecosystem that's emerging to support small businesses, right? So similarly, there's been a lot of innovation in China around, for example, monetization for social media businesses. And some of those innovations are finding themselves in other markets. So there's a lot of that learning that is very powerful that we benefit from. And so that is really our perspective on the venture business. The other change that's happening is, as you said, it is getting competitive. Companies are staying private for longer. And so some of those companies, therefore, also need access to more and more private capital. And there's a smaller set of firms now that have the capital base to be able to support those companies through their entire life cycle. And Lightspeed is one of those that has scaled to be able to be that partner for a founder through the life cycle. So those are a couple of the trends that we're seeing. It is getting increasingly competitive, but I also think that the set of firms that have this global footprint and that have been involved in multiple pre-product to high value journeys, that's still quite small. And hopefully what we can bring to competitive situations is that founders recognize that we not only have the capital base and the global footprint, the global networks, but also the experience of helping these companies navigate. And then finally, and I think it's really important, the humility and the empathy to be good partners to those founders, which I think are things that are not spoken about enough.
For sure. That last part makes me recall. I remember you were getting this award where the first thing you said after taking the award was that it's not us that we do the magic, it's the founders that do it. And I think
Absolutely.
that's when I decided that, that this is something that, again, as you said, does not get spoken of enough. In the closing segments, Bejul, I want to understand, and I'm sure you've been asked this multiple times, but we've spoken about decision making, winning, and also Lightspeed's ideology. But over the years, I'm sure you've spoken to multiple stellar founders, supported multiple of them through your, personal investments through the fund, and multiple others that the fund has invested in. What is that thing that you really feel has stood out about some of the people that are able to, persevere through this tough, challenging journey of being a founder, but eventually make it past the, rocky stages? I'm sure it's rocky at all points in time, but what is it that makes somebody different as a founder, like from your experiences? That'd be
Yeah.
spectacular to hear.
Look, again, founders come in different characters, and there's no one style of a founder that ultimately succeeds. And even the definitions of success, we can debate. I think anyone that creates a company from nothing, where nothing existed, and they create a company, let's leave aside the size and value of the company, but they create something that did not exist, to me, is to be celebrated. That's an incredible thing. That is success. Okay.
Right.
And then we're just talking about what are the different degrees of success. But if I'm to take, some of the commonalities that I see in these founders, one is there is a connection to the market that they have, that is very deep, and you get a sense that they're just on a mission, and nothing is going to stop that mission. And when they run into a brick wall, they'll find a way through. They'll be resourceful, right? They'll be innovative, they'll be creative, and they'll keep looking, they'll keep searching. So I would say that's one. And some of this nature also is, it's captured in this idea of these ideas of grit and resilience and determination. I think I love the word determination, right? Because these people are determined, and that's part of what fuels them and enables them to keep going. And then, I think there is some other characteristics that are important, but I wouldn't say are universal. But I think are some of the best founders do embody them. The ability to identify and attract really talented people, because ultimately you can't build companies yourself. You have to get other people in to help do that. And then finally, sales capability, because early on, if you want to attract really great people, and if you want to raise capital, and if you want to get your early customers, that's all selling. And sometimes selling is viewed as a negative thing. This isn't snake oil selling. This is just the ability to evangelize. It's the ability to communicate in a very compelling way why you're doing what you're doing. Right. And when some of these founders can do that, then talent and capital and customers come their way. And you need those things ultimately to build a successful company.
For sure. I think what's going to stand out for me, and I'm going to remember, is that mission you spoke about, the connect with the market and that unriveting mission that a founder is on, which is very evident. For the second last question, Bejul, I want to pick your brain in terms of the coaching role that a investor has in the life of a founder, right? And I remember, so I've quoted the Vinod Khosla before on the show, but he's mentioned that, the toughest thing for a founder is to decide whom to take advice on. The flip side of that is, how does an investor decide when and how do you advise an entrepreneur? Because I'm sure that they know more about what they're talking about, right? And then it becomes something as I don't know, it just becomes a dilemma. So I'd love to understand, how do you look at it, especially with the years of experience you have on board with some great founders that you've backed again. So would love to hear your thoughts there.
Yeah, I think really strong investor founder relationships are partnerships in a
Mm-hmm.
sense, right?
All right.
And what that means is that the different partners can bring different things to the table. For example, typically founders are, they're very much in the day to day because they're driving execution, right?
Right.
And when you're in the day to day, you don't have the same field of vision that someone who is seeing things from a distance. They have a different field of vision, right? And they're plugged into a different world. And so, to be able to provide that perspective, I think is very powerful. So that then the founder it's almost like you're giving the founder the full field of vision. He or she already has hers from the day to day and whatever he or she is doing, but then is also complemented then with this more lateral field of vision. Okay. The other thing is, at least I believe that some of the strongest founders, it's really more about helping them navigate to the right answer. Because as you said, they will always know more about their markets than we know, right? So it's really helping them clarify and get clear in their own head about these are the strategic choices to make, and to be able to share real examples of where other situations, kind of we've been in similar situations, and these are the types of decisions we took. I think the only place where maybe I would resort to this idea of giving advice, which is more prescriptive, and generally, I think, I'm not sure we need to be highly prescriptive, but I think the time to do that would be perhaps where, you have younger first-time founders, and there are just some things like, we know to be true, having seen the journey of multiple companies. What's an example of that? An example of that is for example, is attracting strong talent.
Right.
Right now, we can have a debate about what strong talent means in the context of that company, the stage of that company in the market. But this idea that you need to attract strong talent to be a force multiplier, it's a truth, right? So if sometimes, with some founders, they haven't experienced that. They haven't seen the value of that. And so that may be more, sometimes when you're pushing a little bit harder, but you're doing that because there's a relationship of trust, not because you're pushing in a sense of, you have to do this. But again, it comes back to that partnership. If you trust me and I'm saying to you, Jivraj, listen, from everything I've seen, it's really important, right, to do this now. And by the way, here are 5 people you can go and speak to, then that's the way it typically happens.
Got it. Again, wonderful cue in terms of, looking at it from the perspective of a partnership and not, let's say, a binding, whatnot, legal, tangible relation. I feel, that adds more value to how you looked at it. For the final question, Bejul, like apart from your life learnings, which I'm sure like we can perhaps, you can leave us with a couple of them. I'd love if you can, shed some light in terms of the relationship building thing that you focused upon, because this quote is also on the website where you've defined, there's a paragraph about you, and you said it in the opening perspectives of the episode where you mentioned about, how you look at being with the right people. But, it's often misunderstood, and we as youngsters perhaps don't see the larger picture in that perspective. Again, no stereotypes or no generalizations here, but just to be clear in terms of what have been your major learnings in terms of building long lasting relationships with people that really matter, would be a great way to end the episode.
I think we should nix the last part of the question, which is with people that really matter.
All right.
Because I think we should build strong relationships with people.
Right.
Not only with those that matter, because
For sure.
everyone matters, right? And you just discover how they matter at different points of your life. And so I also think that when a filter of who matters and who doesn't is brought, then there's a more transactional element to the relationship that's built.
True.
And I don't think genuine, powerful relationships can be built when there's a transactional agenda. So for me, I think, like for example, when you reached out to me, there wasn't sort of, in a sense, a filter of does this matter or not. What I
Mm.
sensed was that you were someone that was really passionate about what you were doing. And when I feel that passion, I want to encourage it. And that was the reason that we're doing this today. And so for me, my learning has just been to just do right by people, and it doesn't take a lot. It's simple things like respecting them, and giving where you can give, thinking about other people, and being open and honest. Um, what I found is it's no big. There's nothing secret here. There's no rocket science. But if you do those things consistently over a period of time, it turns out that you'll build rich relationships.
Right. That's beautiful to hear. And in fact, I can testify it because you didn't just respond to a cold email. I remember that briefly after our first interaction, you were like, what do you tell me more about you? What's your story? Give me more context. And I don't think anybody's ever done that before with me. So it's amazing how simplified you've put it in a very simplified manner. And I just hope everybody can take it because as you said, like I felt prey to, putting it and modifying it in the right manner as well. And I said things that were unintentional in nature, but we have to get past those things and be very natural in our communication and our thinking. So I think this is a great, great way to end the episode. Thank you so much, Bejul, for
Thank
indulging in this
you.
conversation. This has been absolutely wonderful. And I hope you enjoyed the conversation as well.
I did. I really did. Thank you for your questions, and all the best.
Thank you
Thanks for
so
having
much,
me.
Bejul.